when I look out my window.
Hello, traders. Gary Wagner with the Gold Forecast here. It's about 3 p.m. in Honolulu, Hawaii on Sunday, the 30th day of January, and this is the Daily Report. We currently have gold trading up about $3.10, $13.41, $13.42 in terms of the bid-ask spread. We're looking at a 60-minute chart. As you can see, extremely quiet, although it is up a little bit higher. That's this activity right in here. And on today's report, I'm going to be exploring a little bit more in terms of my overall sense for where this market might be going, what I call the big picture. And I have just finished a more generic version of Sunday's broadcast, and you can just go to thegoldforecast.com/Kitco, and that is live as we speak. I have switched over to our daily chart. This has got my current Elliott wave count, but I want to take this one step further. And the step that I really want to take today is look at what we're looking at in terms of overall direction in the market. We had talked about the fact that in terms of our belief, when we look at, let's say, our intermediate cycle, we of course had the end of 3 into 4, then we came into wave 5 here. My belief right now is we are either at or near the end in A. If we see any kind of sustained rally over the next couple of days, what that tells me is that 1305, this particular retracement level here, we had a low of 1308, I believe, and that's what will hold. That will hold in terms of a bounce. The bounce is going to be our B wave. That's going to be right within here. In terms of the market itself, might take us as high as 1345 to 1370. It's going to be roughly 50% of this retracement. Of course, once we see that, I am looking for the marketplace itself to have one last corrective wave. Now, I'm not even going to guess where that corrective wave is going to go. It's certainly much too soon to do that. Whether it moves up like this and it's what's called a flat wave. If it's a flat wave, it's because it's staying right within this tighter channel here. Of course, if it's more of a major correction, it probably will come down. It could test anywhere between 1250 to 1260. It would look something like this. And my belief is if in fact we see that, we would have to take it down another channel line because it would certainly break this one right here. And so it would take the most broad channel line right within here. And that's still maintaining its bullish stance. So that my sentiment is what we probably will see over time is, as I said, the market moving within this channel here. And then, of course, after C, we'll start our next set of impulse waves, or the impulse phase, which will be a series of 5 waves to the upside. The one thing that I have just opened up in terms of what we call our big count, you notice here, these are our major waves here. We haven't really talked about that at all. So that if we, for example, get our ABC, and then we get our 1, 2, 3, 4, and 4 and 5, we would then be in the major 5, and that would even be a bigger correction than the one that we're seeing here. However, traders, that's a long ways away, but that is more of my long-term forecast in the market because we are trending very nice. We're staying within this channel. Even with the corrections, you can see that it's trading in this upward band. As long as it maintains this, we've got more room to the upside interim term. Short term, we have to see how it reacts. Are we going to move right now into this B wave, or does this A and this C have a little bit further to go before it hits bottom and then go to B and C? That's going to be the $64,000 question. That's going to be the question that we need to look at and address over this next week. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Monday for another daily report. Bye-bye.